Hello, FX editors. This is Marcello Ducille here to speak to you on a specific subject. Today, I want to talk to you quickly about the three C's that you've heard me speak of on several occasions. The three C's are our money management philosophy. Essentially, what we're doing, guys, is that we're always thinking first about capital preservation, then about capital appreciation, and then finally, if we're in the right place at the right time and we're doing the first two things, we will have an opportunity for capital explosion. Now, I'm speaking to you on May 4th, I believe, and it is almost about 3 o'clock Eastern Standard Time. And a perfect example of this is an IBO trade that we're currently in, and I will show it to you right now, actually. We're currently in an IBO trade that we just took. Now, guys, we've had all these IBOs beforehand. Now, we know we have a high probability trade, but we have to always think, even though we have a high probability trade, we have to think about how much we risk before we think about how much that we're going to make, how much we're going to gain. Okay? Although we've had these high probability trades and they've won, we're always thinking about capital preservation first. So the very first thing that we want to think about before we take a trade is, how much am I going to risk? Well, here we have our IBO2 robot, and we currently are using percent risk 5%, trend percent 50, inside bars and the like, but 5%. That's what we're currently using. Now, we've taken these trades beforehand, and we have managed to preserve our capital. Obviously, here we've won these trades, but in the event that we didn't, we have capped our risk at a maximum of 5%. Okay? So the most that we could lose in the worst case scenario was 5% on those particular trades. We won those trades, however, and we only take one trade at a time also. So we're not taking multiple trades, we're taking one at a time. A part of this capital preservation, guys, as you see here, I've only got one thing on my chart right now. I've got the Euro USD 4 hour and I'm running the IBO2 on it currently. Alright, now I could have run the pound dollar, which did well. I could have run the pound yen, which also profited. I could have run another trade on this particular currency, on this particular platform, on this particular trading account, but I didn't. With the interest, and the primary interest of not over leveraging. Okay, so here as an example, we only used the Euro USD 4 hour IBO. Now, guys, this is a live account, and as you can see here, we were in a trade. We got into this trade last night. Now, before I say that, we talked about capital preservation, which was, not over leveraging, using, a certain percentage that you could afford to lose. For us, it's 5% because it's a high probability trade and we can take that trade. It could be for you 2%. Whatever is your threshold, that's what you should be using. Capital appreciation is the second thing that we talk about. Capital appreciation. That means here, on these trades, yes, we made money, but we made 2.5% here. We didn't make anything more than that. Here we picked up another 2.5%. Incremental appreciation of our capital. That's what we wanted. We were not so much interested in making a lot of money, but in making sure our equity curve went in the right direction. That's what we did. And finally here, we did the same thing again here. We took our first take profits for another 2.5%. So 2.5%, 2.5%, 2.5%. That's great. Those are good numbers. But here, now that we've placed ourselves in the right position, we've thought about capital preservation and we have capital appreciation. Now we have an opportunity for capital explosion. And that's exactly what we've witnessed here, guys. Capital explosion. Here we have this trade that was taken in the AM 0800 hours, which is about, for us, let's call that about 1 a.m. Eastern Standard Time. Okay, This trade had about 34 pips of risk into it, 35 pips of risk, and it is currently up at 5%. It's currently up almost about 200 pips. Okay, so what we've done here essentially, guys, is we have taken our trade, we've taken our risk, and we've managed to take that leverage and parlay it into a larger sum. Now, those who are on the call and saw this account, this is a live trading account. See the account history here. We started this account just a month ago with a $5,000 deposit for those who needed to see this thing actually work. And so what we did, we started with a $5,000 deposit. As you can see here, we had incremental increases, incremental appreciation of our capital, and we had a couple opportunities for capital explosion there as well. For those who are on that call, they got to see that. And now, just a little over a month, we're up 40%. Now, guys, we went from 5K to what we're currently at right now, which is we're showing a 30% increase here, and we have capital explosion. We have another 10%, which is sitting in our open trading right now. So we've managed to increase this. We have a paper profit of 40%, and we've locked in 30% of our profits during that time period. That is capital explosion, guys. This particular trade by itself, if you look at it, it's up almost 200 pips. If you think 200 pips on a trade that has about 35 pips of risk into it, is roughly about, would say about 17.5% trade. So literally in that trade, at 5% risk default, in that trade, you have the opportunity to witness capital explosion. For those people who are in this trade, you've done quite well. Continue in the trade. Don't break your trading plan. If you don't have the Euro USD IBO 4-hour on your trading plan, I would highly recommend that you add it to your trading plan. Okay? And I think that's about it. This is Marcello Ducille signing off with www.thefxpert.com. I hope you have taken something away here.